electricity has been the stable part of the entire thing, Ashwin, where you've seen electricity and light and fuel lighting constantly perform better. About 5.4% coming in for electricity. I just want to go back to food and beverages pricing. I don't think we have the food inflation breakup as of yet. This is the big one. March capital good production has fallen 12.5%. I wonder if we can connect with Mr. D.K. Joshi at this point. Mr. D.K. Joshi joins in at this point, getting us a view from Crisil. Evening, sir. Thanks for joining in. The numbers at the start of it not looking encouraging. Let me take an optimistic view, Mr. Joshi, given the fact that the entire hope rally is still on with the equity markets and the revival for the economy. Do you think this is the bottom? We knew this would be weak, especially on the IIP contraction. We were expecting this, given that it's March, code of conduct was in play, a lot of activity completely stalled. Do you think we're set for better times after this as FY15 kicks off?
Well, I think it all depends on what kind of election mandate you get. Right now, as far as the real sector is concerned, there's not much movement, as you rightly pointed out. I think what 2-3 months back, things seemed a little bit positive, because I think what we saw was there was an expectation that GDP will move up and inflation will edge down, and actually had started edging down. But now I think as we get to the close of 2000, we've already closed 2013-14. The last quarter GDP is expected. I think that is also now the expectation is that it will remain subdued. So the gap between growth and inflation, which was narrowing, I think now again is kind of diverging. So you are right now there's very little comfort to be had from the real sector data. But going ahead, what kind of government is formed, what kind of policies it follows, I think that is going to be very critical. And the first, I think, dose of optimism will come from after the election results are announced. I think if they are favorable, that will add to the sentiment. And beyond that, I think it will all depend on what policies are followed. But yeah, definitely, I think their confidence in the system will start restoring as soon as I think you get wind of stable mandate.
Mr. Joshi, merely to talk about capex cycle right now, we've got some early reports suggesting from the CMI data that there has been some revival when it comes to on the ground. But these are not new projects; these are older projects that have already got clearances and are starting to show some improvement. But as we talk about this hope rally, we talk about a new government coming into play. The bigger worry will be that a lot of the issues that these companies have been facing are state level. These are not central level issues which can get resolved, be it land acquisition, be it some of the environmental clearances as well at state level. A lot of it is state level based. What are you gathering from your research? This will not just vanish overnight of May 16th, even if we get a thumping majority.
Yeah, that is why we expect a very mild recovery as of now, and I think we came out with a report couple of days back which pointed out that even with a stable mandate, even with the right policies in place, I think it's going to be rather difficult for the economy to surge ahead at a very fast pace. Our expectation was that economy will register 5% per annum growth in the next 5 years as a base case scenario, and there is not much upside to that, and that's premised exactly on the stuff that you just pointed out. It is, I think, what a stable mandate and a more resolute government can do is it can actually add speed to the resolution of some of the pending issues and improve the business climate. I think that itself will kick in will give some positive signals and to the economy. Now let me point out that in the last couple of months we've seen some projects getting cleared, and you also pointed out that is reflected in the CMI data. Now all those I think will get leg up if you get a stable mandate, and they'll very quickly see flotation. Beyond that, I think we need to resolve all the issues, whether it is land acquisition or environmental issues. Or it is fuel linkage issues. I think these need a quick attention. And then the other thing why a swift recovery is rather unlikely is because you don't have a counter-cyclical policy tool. You cannot cut interest rates or increase fiscal spending to boost growth up. Reason for that is that government can push growth up through fiscal spending if they have the room to do that, and there is very little room. And as you were pointing out, I think if you get a bad monsoon year, then the growth will itself suffer, inflation will go up, and the growth inflation dynamics will become quite unfavorable. And in that scenario, there'll be need for government to cushion the economy through some fiscal spending. So I think that will limit their ability to do other things. I mean, the energy could be sapped by just firefighting. I mean, if you get bad monsoons, and fiscally, I think we are definitely constrained. So what I think should be done is that in the short run you cannot do too much of fiscal consolidation at this juncture because the economy is in bad shape. But if you bring in something like GST, which pushes the growth up and also shows up the revenue, then I think if you do them simultaneously, then you are entering into a territory where people can be confident about future fiscal consolidation. I think that kind of message will have to be very strongly sent. Right now I don't see too much fiscal consolidation happening, and because that will be very detrimental for growth at this juncture.
Mr. Joshi, before I let you go, I want to take your view on the rupee. I know that you've maintained that don't expect any large moves on the currency, and the 61 to 62 is the range that you've been looking at. We've seen some swift moves coming in the currency. We've seen some swift moves back as well, which one would largely attribute to either importer demand coming in at higher levels or the RBI being smart and shoring up reserves. Do you see that continuing, that every higher level you will see the central bank coming in and shoring up reserves, given that now that the RER is showing that the currency is slightly overvalued even at these levels, and the downside risk to the rupee is higher at this point?
Well, I think what the central bank, it doesn't have the policy of targeting any particular value of the rupee. I think they maintain that they only curb volatility, and I think that's what I expect to continue. So our call is based on a variety of factors. I mean, which is that the current account deficit, if the growth picks up, will deteriorate a little bit, and that will create some pressure on the rupee. So there's a mild depreciation bias in the rupee over the next year, though you might see some very swift movements, appreciation pressure on the rupee. But yeah, central bank will I feel will intervene to curb very sharp swings in the currency either way.
All right, Mr. Joshi, thanks for joining in. That's the view coming in for Crisil. It's going to be a heavy week for politics and economy, and for the currency, as we're just talking to Mr. Joshi as well. The currency has seen some swift moves today. Let's pull up the intraday of the rupee, because that's where the real action was. We went all the way to 59.50, which was a fresh 8-month high, the highest level we've seen since